Hi, this is Kerry Artag with Wicked Stocks bringing you your daily Apple report for Monday, March 27th, 2023. Before I move through all the charts, just want to encourage you to please click like if you would each every time you watch the daily Apple or Tesla report. It helps us out a great deal in being found on YouTube. Also, become a subscriber to the Wicked Stocks YouTube channel. You'll be provided notification each and every time new content has been uploaded, and that includes the daily Apple and daily Tesla report. And check out wickedstocks.com, where we offer a full assortment of analytical videos on a daily and weekly basis. Every day, the daily Triple Q, the daily SPY report, that's the NASDAQ 100 and the S&P 500 ETFs. Also, two individual stock picks every week. They're all in 5 to 10 minute video format. Last week, we did Eli Lilly, and Etsy. And, we do those twice a week without fail, and you never really see them on YouTube. We also do the weekly S&P 500, NASDAQ 100, and the long bond ETF, the TLT. And that pretty much rounds it out. It's a basic subscription, monthly subscription, and you've got a 5-day money back guarantee. So if you check us out, you go through the payment gateway, you take a look for a few days. If you don't like it, we offer a money back guarantee. Just shoot us an email and we refund you, no questions asked. So taking a look at this chart of Apple, a weekly chart that goes back 4, 5, 6 years, 5 years really. We did bottom out last January in this targeted zone of long-term support in the 120.34 to 126.33 region. It was a little different then. There were other things happening here at the time on the daily chart, but it held nicely. We rebounded nicely. At the time, we were mentioning the possibility of this 169.36 channel top by some point in 23, and we are well on our way there. One of the defining moments for that being a clear objective was the settlement in early February above this descending channel top at 138.77. That was we gapped above that one day. We've been holding above it ever since. And on the way up, I've been mentioning the long-term descending two-thirds speed line at 158.83, which we closed above last Friday for the first time, and a 5/8 upside Fibonacci using the same points, A being the all-time high from late 21 against B was the January low of this year. And so 160.49 is still sort of the other shoe to drop, if you will, in terms of testing this resistance. This has been anticipated as a trouble spot, perhaps, for Apple that just may contain not only weekly buying pressures, but possibly well into April trade. We could come off of here. Now, having closed above 158.83 last week was a constructive dynamic, and it is also consistent with the overall 172.03 long-term objective. The big question, of course, is will we see 172.03 over the next 2 to 3, 3 to 5 months, or in as many weeks? And the latter would be true, in my opinion, if we close today above 160.49. And then we have a confirmed secondary buy signal, 172.03, then likely within 2 to 3 weeks, where we could actually top out, possibly through the third quarter, fall off from here in a meaningful way over the months ahead. And if we were to close above 172.03, that would represent a significant longer term buy signal for Apple, and we'll be covering that closely at that time. So that is sort of the big picture. We could also fall back from here. Yes, we closed above the 158.83 speed line, but we have not closed above the 5/8 Fibonacci. I really want to see both for sort of a confident buy signal as we move into April trade. We could then fall back and test this new trend defining rising one-third speed line that is presently at 150.90. And let's take a look at the best chart for that. I'm going to jump to this one here. 157.81 I have added. Now I've got 158.83. That is that long-term speed line that I just showed a moment ago. But you can see the low of the high has actually been performing pretty well Thursday, Friday of last week. The high was put out on Wednesday. That low is 157.81. So in terms of sort of a reversal of momentum as we move into later week, it would be a settlement below 157.81. On a day trade basis, breaking 157.81, I think 155.49 should be expected. And then, of course, if we close below 157.81, I have DP here as a down pivot that pivots the market south into later week. The next 3 to 5 days, I'm guessing, I don't think it'll take much longer than that. should then yield this meaningful band of support right now that I already showed, the 150.91 rising one-third speed line that is based in part on last week's high, and a new rising channel bottom that is based on the last several weeks activity at 152.17. You can see down here the low 150s able to absorb selling into later April, excuse me, possibly through April trade. I'll mention that holding above this rising one-third speed line maintains longer-term bullish momentum. This 172.03, a channel top, which is targeted anyway as a 3 to 5 month objective following the early February settlement above it. We're almost 2 months into this buy signal, so there's several months left to play out. And we could fall to 150.91 this week, confirmed with the settlement once again today below 157.81. The 150.91 rising speed line able to absorb selling, let's just say through April trade, and from here we can not only reattack, if you will, this 160.49 area within a week or two of doing so, but continue onward and upward into the low 170s within possibly 3 to 5 weeks of testing 150.91. Now it would be a settlement below 150.91 that would indicate a bearish continuation into later April, and I would then expect 138.77 as a 2 to 3 week objective. 138.77 is once again this long-term channel top on the weekly chart that could, if tested over the next month or two, absorb selling well into the third quarter, possibly through the third quarter. And once tested, I would then begin eyeballing, if you will, this 172.03 formation as a longer-term objective. But right now, I think the big test, of course, is that this zone here in the low 160s. This has been a trouble spot all week. It's been containing buying pressures. The fact that we closed above the two-thirds speed line is favorable. If you went long based on that last Friday, you don't have a strong argument from me. We're bullish anyway, and so you really want to see the market close today above 160.49. Now, upside today, we do have 164.44, and this would be in reach today if we did push or open above that 160.49 level. I would expect hesitancy on the way up at 162.14. That is nothing more than last week's high from last Wednesday, but that's not a significant level. I think we could top out there on an intraday basis, well suited for aggressive day traders. But really, if we push or open above 160.49, especially after having closed last week above this trend defining speed line, that we could actually quite easily test this 164.44 level. This is a new rising channel top over the last few weeks. I'm keeping it light here, session containment only. In other circumstances, I might call this a 3-star resistance. But because we are in the process of pushing through perhaps this longer term resistance area, you really need to keep it light here because this market can just start moving. I will say that if we were to close today or the next few days above this rising channel top, that adds more fuel to a rally. And we could then, under that circumstance, by the end of next week, reach this 172.03 channel top. So, in terms of, the swing trade in the 3 to 5 day, 2 to 3 week position, it's really 160.49, closing above 160.49. Your 3 to 5 day swing trade turns higher, turns bullish. Your 2 to 3 week position trade turns bullish. You could reach for 170, 171 out of the money calls that don't expire for at least a few weeks. Inversely, taking a look at the downside, and that's the wrong chart. Let me go back to this one. Closing below 157.81, your 3 to 5 day swing trade reverses, and you're going short into the low 150s. And that is really sort of the dynamic now. We are bullish above 160.49 over not only the next 3 to 5 days, but even the next 2 to 3 weeks. You could play the short side in this zone if you aren't already. This is where it's 6 of this, half a dozen of the other. We have a buy signal above 158.83, which I think is very constructive. We're bullish anyway, longer term, but it really is 160.49 that needs to give way, in my opinion. Settlement above, and we're off to reaching the low 170s over the next few weeks. Until then, if you're playing the short side right now, you have no strong argument from me. We could fall back into the low 150s, without difficulty here over the next, 3 to 5 days. That would be confirmed with a settlement today below 157.81. Closing below 157.81, you're playing the short side for the next 3 to 5 days into the low 150s, where you want to cover those short positions. That could be maybe having bought 152 out of the money puts that don't expire for at least a week. That is one idea. Or you're just going long, buying the stock itself in the low 150s aggressively. 3 to 5 day swing traders, also 3 to 5 week near-term investors, because this low 150s, if tested, can absorb, as I said earlier, buying possibly through April, and from there we push on into the low 170s. And finally, it would be a settlement below 150.91. All bets are off. This market can fall, aggressively over the following 3 to 5 weeks or less into the upper 130s. I think that pretty much rounds it out for today's Daily Apple Report. Please click like and subscribe and check out wickedstocks.com. I'll be back tomorrow with another Apple Report. Have a great day.